Hi, my name's Andrew Masters and I'm an analyst at FIBO Group. In this video, we'll talk about technical analysis. You already know how to analyze the market with the help of graphical analysis. You know that such key tools as lines, levels, and candlesticks provide us with an entry and exit points. That is everything required for successful trading. However, we should not confine ourselves only to graphical analysis. We should at least try the other methods of the market analysis. There are people who eat vegetables, meat, and fish, and there are vegetarians who do not recognize the meat and eat only the vegetables and some fruit. In trading, we have a similar situation. There are traders who use technical, graphical, and fundamental analysis as a whole, and there are traders who confine themselves only to technical or graphical analysis, or they develop the trading strategy solely based on the news. They are guided only by the fundamental factors. Prior to moving over directly to the basics of technical analysis, I would like to remind you that the Forex market does not have any right or wrong things. Or you are trading by the stars, go ahead, as long as it brings you profits. In Forex, the right person is the one who has earned more money. So technical analysis, let's determine what it is first. Technical analysis is the use of mathematical methods necessary for formation of indicators that will act as filters for determining the particular properties of the market. In fact, they are mathematical tricks in financial markets. The main tool of technical analysis is the technical indicators. Technical indicators are graphical representations of mathematical transformations of price flow. There is a large amount of indicators. As in the case of meat, fish, or fruit preferences, there is no right or wrong one. Everything depends on the fact whether you can build the right trading strategy on these very factors. So all technical indicators are divided into four basic groups. Trends, these are indicators determining the probable price direction. The most popular are small, VMA, WMA. We will learn each of them a bit later. Oscillators. These are the indicators determining the probable turning point of the price chart. Unlike the trend indicators, which operate only in the case of the directed movement in the market, i.e. with the trend, the oscillators are equally good with both trend and flat. The most popular oscillators are RSI, MACD, stochastic, volatility indicators belong to the third group. These are indicators that assess the probable potential of price movement. This volatility in the Forex currency market means the degree of price variation. It's not difficult to understand this term. The price forms the high and the lows over the certain period of time. The distance between the highest and the lowest price will be an indicator of volatility. The fourth group comprises the so-called special indicators. They include non-cost and non-market indicators, but we'll discuss them during other courses. Now you just need to know that they exist. So in the next video lesson, you'll learn about the properties of the trend indicators as well as about the moving average and its types.